Good morning again to those that have just joined us, and welcome to GreenStones online meeting around Flexible Furlough Scheme, or FFS for short. Yes, Helen, I've just seen your message in the chat. You are in the right place for the webinar. We're going to be talking all things brilliant. Hello, you can see me there, Helen, brilliant. As long as you can see me and hear me, that's great. We're going to be talking about all things flexible furlough scheme and the intricacies of it this morning. That's a big word for Tuesday at 9:30 without any coffee. And we're also going to touch on the self-employed grant or the self-employed scheme and the extension to that. And we've also got half a dozen questions already that we're going to give you the answers to. Now, the whole purpose of these conversations is to answer your questions. So if during the course of the conversation, whilst I'm speaking or Nicola's speaking, you have any questions, then just click the little Q&A button at the bottom of your Zoom screen. It's got two little speech bubbles come up over the top of it. If you click that, you should get a Q&A box pop up. And if you pop your answer in there or pop your question in there, it should pop up on my screen and we will gladly answer it as we go through. Or alternatively, you can use the chat box. So if you post your question in the chat box, it'll appear on this screen over here and we'll answer that as well. The slight challenge with the chat box is that sometimes if there's lots of questions or lots of comments go on, they scroll off the top of the screen and I might miss them. So it's easier for me if they go in the Q&A box. So without further ado, if I can see Nicola. Nicola is going to run through the changes to the scheme as we know them at the moment, or the extension of the scheme as we know it at the moment. I should also share that there was an update overnight last night, and apart from the Welsh translation that was added to the guidance, nobody can spot anything else that's changed since it was issued at 2 minutes to midnight on Friday night. So they just about hit their 12th of June deadline. So without further ado, I'll hand you over with a virtual round of applause to Nicola, who's going to share the latest update.
Thank you. Good morning, everyone. So as Simon said, we're going to talk through the flexible furlough scheme. So yeah, the updated guidance got released on Friday night. So we had a fun weekend there to go through. But what we're going to do, we're going to chat through a few things. So Simon, have you got the copy of the spreadsheet? Because obviously being accountants, we cannot have a webinar without a spreadsheet. So let's start with the spreadsheet. And what we're going to do, we're just going to talk through the changes that are coming first, and then we'll go into the intricacies. So Simon, are you able to share your screen, please? See that?
Yeah, it's coming, yeah.
Okay, thank you very much. Perfect. Okay, so what you can see in this lovely little spreadsheet is what's happening over the next few months. So we're currently in June, and June is going to stay the same as it was for March, April, May. So June, you have to be out of work, you can't be working for 3 weeks minimum period to be furloughed, and then the government is contributing 80%, capped at £2,500 per month. The employer contribution and the employer pensions for NIC and pensions are being contributed by the government, and that is June. So the changes come in July. So the government have brought that forward a month because initially the changes weren't going to come until August, but they've decided it's time for people to go back to work. So what does that mean? On the 1st of July, part-time furlough can exist. So you'll see in column C there, the numbers are all exactly the same as June because it's still an 80% claim of wages, capped at £2,500, and government are still contributing to the employer's pension and national insurance. But you can now part-time furlough your team. So what does that mean? That means that the 3-week minimum disappears. So at the moment, we would have to have 3 weeks of a gap of someone not working at all, which obviously could be a bit difficult at times because you might want someone partway through the week just to do something to help you. And at this point in time, you can't. But in July, you can. So you could furlough someone, unfurlough someone, furlough someone, unfurlough. So just to note on that, each time you furlough someone, it is believed, and just to claim, this is the guidance at the moment, we're still waiting for the exact legislation, but the guidance hints at the fact that each time you go onto furlough, you need the employee to agree to go onto furlough. So previously we sent out a little template that was a sort of letter that said employer and employee signed it to say they agreed to be furloughed. So let's give you an example. We're going through July and maybe we get to the 10th of July and you need to unfurlough someone for a couple of hours work on that 10th of July. So you might need them to do a little project for you. So they're furloughed up to the 9th of July, you unfurlough them, and then what will happen is when you need to refurlough them, I think from memory, the 10th's a Friday. So when you need to refurlough them on the 13th, what will happen is that you would obviously need to furlough and unfurlough and then furlough again for the next day or weekday, but we'll come to the days in a moment. And then what would happen, you'd need them to sign to say that they're happy to go back onto furlough. So you'll note in that example, I said if they were doing 2 hours work, again, as it stands at the moment, it's done on a day rate. So if you're unfurloughing someone, even for 20 minutes, even just to send a few emails, that whole day they become unfurloughed. So that means that you would pay for their working days, and then the government would pay towards the days they are furloughed. So again, that's still prorated at 80%. So let's say your admin, you might have an admin team member who normally does 5 days a week, where you maybe don't have the work available for them to work all 5, but you might think, okay, what we'll do on Mondays, Tracy, for example, well, let's call her Tracy, let's give her a name. Tracy can come into work and she'll need to do some work for me on the Mondays, but Tuesday, Wednesday, Thursday, Friday, I don't have enough work. So in that example, you would furlough Tracy for Tuesday to, let's say, Sunday for now. I'll come back and explain the days in a minute, and unfurlough her on the Monday. So what would happen, you would pay Tracy her 1 day per week, normal rate, 100% of her wages for whatever that day rate would be. So if Tracy was doing, obviously if Tracy is a full-time employee, you would divide it by the number of days in the month to get that day rate, and you would pay Tracy that day rate for each Monday she works. And then what happens is the government will contribute 80%, but it's prorated because obviously she's now working a little time out of that. So you would then prorate that so that the 80% isn't applied to Tracy's full wages, because obviously she's working, say, 4 days in a month. So you would do the 80% or the £2,500 cap on the other bit that she isn't working. So it sounds very technical, and that is because in true government style and HMRC style, it is a bit technical, but the fundamental is you would need to pay her for her working days in 100% full. If you need any help with the calculations around part-time, because let's be honest, the full-time ones weren't fun, so the part-time ones are going to be not fun at all, then feel free to let us know, and of course we can help you with that. So that's July, and that's the only change that comes to July part-time. Then what we're going to do, we're going to move on to August. So in August, that part-time element can still happen, and it's also worth noting, you can of course still full-time furlough someone. So if you don't need them at all still, you don't have to use this part-time, you can leave them full-time furloughed. But in August, this is where we're beginning to be weaned off of the furlough scheme. So what does that mean? Well, in August, the government will still contribute 80% up to a £2,500 cap for the employees who are furloughed, but they will no longer pay the employer's NIC and pension contributions. So they must now be paid by you as a company. So that's August. Then we get weaned off a little bit further in September. So again, no employer NIC or pension contributions, but this time, the government will only contribute 70%, but the team member must still be paid their 80%. So for easy maths for my head, let's say someone earns £100 in a week. So they would still need to get the £80 in a week being paid to them, 80%, right? Employer's contribution and any pensions, those numbers are a bit low, but if it were on an amount that was over the thresholds, would have to be paid. But also, you would then only claim £70 back from the government. So obviously there's a 10% there that you're having to pay. Simon's just popped up.
Yeah, I'll just to get clarity on that point, Nicola. So if you don't have to pay a team member 80%. You can effectively pay them what you like. However, you can only claim back it now 80% of what you pay. And in September, you'll only be able to claim back 70% of what you pay. So the majority of employers are paying the 80% at the moment because they can claim back 80% from the government. And in September, I would imagine that the majority of employers will carry on paying the 80%, but they'll only be able to claim back 70% of the 80%. But subject to the employment law and the contracts of employment that you've got, I do know of businesses that have reduced pay by 60%, and then they're claiming 80% of the 60%. So I'll just so there's no ambiguity in those numbers. Yeah, you can effectively pay what you like, subject to being able to get away with it in order to be able to get agreement with it in accordance with the employment contracts. But from September, you'll only be able to claim back 70% of what it is that you've paid, and you will still have to contribute the 10%. So just to make sure we've got some clarity on that.
Okay.
Thank you.
So,
cheers, Nicola.
As Simon said, obviously, normally most people are continuing to pay, but like Simon said, some people have changed the rate of pay, the initial rate of pay that's worked on. But if you were doing it in the normal pay rates, then that's the way it would work. And then similarly with October. So on October, 60% this time of the furlough pay will be able to be claimed back, and 20% in that case, if we were still going towards the 80, 20% would obviously then be paid by yourselves instead. So again, no employer's NIC, no employer's pension. And as you'll notice on the capped line, row 4, the capped amount obviously goes down in line with the pay. So 80% at 2.5, as the percentages go down, you notice the cap moves to 218,750 in September and 1875 in October, just to obviously begin to wean off on the higher salaries there. Okay, any questions or any points you want to add on that, Simon?
Let me just, if I bring that back, start that again, and then I'll just take you off. So the screen share stopped. Brilliant. So I don't think we've got any questions. Just to be clear, and I'll just reconfirm, this on-off signing business sounds a complete pain in the backside to me, and I'm reasonably confident that at some point a clever lawyer will get an agreement drawn up that enables you to get around that in some way, shape or form, a bit like they did the working time regulations back in the day, in order, because it removes a large amount of the flexibility, and also the hours and the whole furlough days on and off is going to be a really interesting concept, especially if you've got somebody that normally works perhaps 2 or 3 hours a day over the course of the week, because they come in and they cover for some childcare or whatever it is. Then that's going to be a minefield of a calculation. And then just to add a little bit more excitement to the fact, we've already got people that are earning more on furlough than what they would do if they were unfurloughed, because they were on flexible hours, 0-hour contracts, and they were earning more last year than what, when they come back, they're going to earn this year. So if they're in the hospitality industry and they're opening up, say, a pub or a cafe, and they're going to serve food outside of the establishment, the business owner obviously needs to give them enough hours to be paid more than what they would be if they were sat at home, which clearly isn't the intention of the scheme. So I've got a feeling that is going to change as well. Lynn's asked a question, Nicola. So you could pay 70% in September to staff.
I think that's linked, Simon, to your point.
So I believe you can, subject to contracts of employment and all the rest of it, Lynn, you can pay the 70%. However, you can only claim back 70% of what you pay. So there's a distinction here, and everybody assumes that furlough pay is furlough pay. It isn't. There is a payment under the contract of employment. So whether that be £100 or whatever it is, you physically pay the staff a sum of money. You are then able to claim, which is a separate calculation, a separate function. You are then able to claim a percentage of that back from the government as a furlough claim, and we're going to talk to you about how the mechanics of that has changed in a minute. So if somebody is normally paid £100, what most employers are doing at the moment is they're paying them £80 and they are claiming back 80% of the £100. When we get to September, if you still pay them the £100 or 80% of the £100, 80 quid, you will only be able to claim back 70% of the 80%. If you drop the pay to 70% of the £100, you'll only be able to claim back 70% of the 70%, if that makes any sense whatsoever. But basically, they are looking to you to contribute 10% of their, so they're going to reduce the amount that you can claim by 10%, I think is an easy way of explaining it. But I think I might have just complicated the matter even more. But anyway.
Lynn's query, Lynn, if you want to get in touch with us and we can go through specifically what it means for your business, because Simon said it's messy in the way that things are on and then off again, and it depends on contracts, and obviously there's a legal side to that we're unable to advise on, but we can have a chat one-on-one if it helps, if you want to pay them less than what you have been doing. So we can have a chat to work out how to do that. Okay?
Brilliant, thank you. That's it at the minute, Nicola, thank you.
Perfect. So what we're going to do, to summarise that lovely fun part there that we have, the July is the part-time, the August is pensions and NIC, the employers then have to pay for. September, same, but with 70% claim, and October, the same with 60%. So now what we're going to do is we're going to go through the mechanics of how that can work. So there's a lot of updates that have slipped through here, and some of them haven't really been shouted about as much. So these are the bits, although people might have seen the table already, but these mechanics are the bits that people aren't necessarily aware of, which are really important. So the first one is to use this new flexible furlough scheme, FFS, as Simon keeps nicely calling it, which threw me right off the first time, is what you need to do. You need to have been furloughed by the 30th of June. So in this June period, obviously, to have been furloughed, then you need to have been furloughed for a minimum of 3 weeks. So when this scheme started back in March, up to the 30th of June, you will have needed a 3-week period, which means if you've never furloughed a team member before, they will need to have been furloughed and not working at all from the 10th of June to the 30th of June to ensure that they are able to be furloughed July, August, September, October periods. Make sense? So that's that one. There's a question. Should we come to that one now?
I thought the furlough was a percentage of their full salary, if we forget the cap for now. So if somebody earns £100 normally, then you can claim £80 from the government, and then it will reduce to £70 and £60, not 70% of the £80. That's correct, Ian, subject to you not having reduced their salary. I knew I was complicating it when when I started that conversation. So in the majority of the cases, if somebody is normally paid £100, you can claim £80 and pay them the £80. From August, you've still got to pay them the £80 and you can only claim £70 back from the government. That's how it works in the majority of the cases. If you've got a position where you are looking to reduce the payment, or what you're actually paying them, so you're not paying them the £100, then it's a more complicated answer, and I'll gladly have those conversations, or Nicola will gladly have those conversations with you on a one-to-one basis. But yes, in the majority of the cases, if you pay somebody £100, you will pay them £80 and then claim back 70% or 60% as the amounts drop in the future. If anybody else has got any other questions on that, then please ask, or we'll come back to Ian and Lynn. If I've not explained it very well for you, then obviously we'll have those conversations on a one-to-one.
Perfect. Okay, thank you. So yes, so obviously the 10th of June to the 30th of June. So now let's say that you've done that and you've furloughed people, and you know re-furlough them in July, August, September, October. So what happens next? Well, the next thing to think about is, obviously we've just seen in that table that the scheme is going to change every single month now. So if the scheme changes every single month, you can no longer cross over a month. So for example, I know for a fact that some people might have a fortnightly payroll. So obviously next week, or in a couple of weeks' time, the 30th of June falls midweek. So if you pay someone on a Monday to Friday, what will happen is you're going to pay 2 days of June and 3 days of July, and you might want to do that furlough period as one whole week. Well, that won't be able to work anymore. So what needs to happen is all the June claims need to be done together. So up to the 30th of June, you can do as many as you want to the 30th of June, but they need to be done together because they're subject to the old rules. Then what needs to happen is the gap of the 1st of July to the 31st of July, they also need to all be done together. Because if you think about it, that's the part-time bit with 80% pensions, NIC, etc., etc. Then August comes, and obviously at this point, you're now no longer able to claim your pensions or your NIC. So now what happens is you can't straddle July and August together because there's a mishmash of calculations. So you'll then have to do all of August together. So you could do the 1st of August to the 7th and the 8th to the 14th, but you can't do the 29th of June to the 3rd of July, etc., etc. So when doing your claims, just remember they can't cross over month ends, okay? So that's that one. That might also mean, for example, if you, the way you pay your team, dependent on if your pay does straddle. So I know it's a rarer thing, but it does happen. If your pay does straddle a month end, then just bear in mind that obviously you might have to pay someone when you're not going to get the grant quite as quickly, because if you need to pay them up to the 3rd of July in June and you can't even do the claim until the 1st of July hits, then at that point, you've then got to wait your 6 days for the money. So just think about your cash flow, because you might be out of cash for a little bit whilst you wait for that claim to come in when the new month is ready. So that's that one. So the other thing to think about is the way that they're doing the claims. So I'm ticking all my points off to make sure that we're not missing a single one. So the June claims must all be claimed for by the 31st of July. So you don't want to miss the June, obviously. So if you've thought up to this point, do you know what, we've been meaning to do the furlough, there are people not working, but we've not done any of the claims yet, it's fine, we'll do it in the future. Start doing them very soon, because by the 31st of July, you won't be able to claim for June, May, April and March. It needs to be done by the 31st of July so that you don't miss that deadline. So that's the June bit, that's all to do with the old scheme. The earnings on the new method are still the same workings as before. So obviously for a lot of people who had fixed pay, they were looking at the February 2020 pay slip and using that as their base. And if you were on variable pay, you were using the average earnings compared to the same period for last year. So the earnings basis is still the same. Just one thing to quickly note on that, it's now written in guidance, it must be done on calendar days as opposed to working days. So previously it wasn't clear and there was mixtures of working days, calendar days, etc., etc. All great fun, love a bit of interpretation in HMRC, but now it should be done on calendar days. So all the examples given on HMRC website are to do with so obviously this is mainly because of all the part-time that's coming. If somebody, we used Tracy earlier, if Tracy works 4 days, it's 4 days out of 31 days in July to work out her part-time. So do it on the calendar days, irrespective of if they're working 7 days a week or not. So that's that one. And then we also need to be aware that when you do the actual claims, so when you do a claim for each month, at the moment, you might have people that vary. So you might have 5 people that were furloughed in April, 7 that were furloughed in May, and only 4 that are furloughed in June. Well, when July comes, you can only furlough up to a maximum of your highest claim over the previous periods. So in that example, we have, I think I said 5, 7 and 4. The maximum you'd be able to claim from July is for 7 people, which in theory might be absolutely fine. But if you suddenly need to furlough more, or you have somebody return from maternity leave, for example, then you might come a little bit unstuck, because you might want to then use all those 7 people back on furlough and the lady who's returning from maternity leave. So you then might want to furlough 8 and you're capped at 7 because that is your highest previous claim. So that's another little thing they've snuck in there that again isn't overly being published. So again, if you need to furlough more people in the future, and assuming they've not been working since the 10th of June, then furlough more people in June. So you might want to consider furloughing more people in June so that when July comes, you have the capability to go up to a higher number of people on each claim.
Just to interject on that, Nicola, as well, it's really important. So for some organisations, I know what they've done is say they've got 10 employees, they might have furloughed 7, and they've got 3 people working or were working full time. So their maximum claim number is 7. Now, I've had conversations already with a few people that said, okay, so from the 1st of August, from the 1st of July, what we'd like to do is spread it around a little bit so everybody starts to get reintegrated in the business. So if over the course of July, everybody's furloughed, obviously the 3 extra ones need to have a qualifying period before the 30th of June, but let's just say they have. What we're going to do is we're going to spread it around so everybody's working a bit. You won't be able to claim for 10 employees because the maximum number that you've claimed for previously was 7. So you just need to bear in mind, if you're furloughing and unfurloughing people, then that maximum limit that you've already established because of the submissions that you've already made. And it'll give you time for a drink, Nicola.
So from my point of view, they're all the furlough points. We'll move on to obviously self-employment. I appreciate there's a lot. So what we've done is made a lovely little slideshow. Simon, did you want to give a quick recap on your slideshow?
Yeah, I won't share the slides, but just to give you a recap of what Nicola's just shared, the important sort of summary. Most important is all claims for periods before the 30th of June need to be submitted by the 31st of July. If they're not in by the 31st of July, you will miss your opportunity. Everybody that you are furloughing under the Flexible Furlough Scheme, FFS, must have a 3-week qualifying period that concluded on or before the 30th of June. So they've already got to have been furloughed for 3 weeks. If they're not furloughed now, you're too late. Anybody that you furlough and are going to claim for, they need to have been on an RTI submission before the 19th of March. So they needed to have been on your payroll before that date. There's no change for that. As Nicola's just said, the numbers on the claim cannot exceed the highest number on a previous claim. So you need to be careful about if you've not furloughed all of the people or you've got people coming back potentially from long-term sick or maternity or paternity or any of those different things. And it's going to be worked out on calendar days. It appears that if you unfurlough somebody, you unfurlough them for the whole day, not for a set number of hours. So you need to be careful about spreading, say, 7 hours over the course of a week. You might want to unfurlough them for a day and then refurlough them for the rest of the week. And then claims must be made on a calendar month basis, not on a payroll month basis. And the more I think about that, the more daunting that calculation becomes from a claim period. So we've got a number of customers where they have pay periods that straddle the year end. They're on 4 weekly pay periods or 2 weekly pay periods, or they're paid on the 5th of the month for the following blah, 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 blah. So as soon as that goes over the month end, then there needs to be 2 separate calculations, and the end bit needs to go on next time. So it's just, for me, it just feels a bit of a minefield that I'm hoping will be relaxed. And we've not even talked about holidays, Nicola. That's the other thing about furloughing on holiday and unfurling on holiday and what qualifies for that, which is, for me, is a massive area that's open to a huge amount of abuse, subject to whether you've got qualifying people or not. And I can't believe that won't be clamped down on. I won't share any more because I don't want to give anybody ideas about how they might get around the system. But there is a really big own goal there that may or may not be exploited. But so yeah, that's a brief summary. If anybody's got any questions on Flexible Furlough Scheme, then pop them in the Q&A or pop them in the chat box. And we're just going to do Self-Employed Scheme briefly, and then we're going to start answering the questions that we've already got pre-submitted.
Yeah, perfect. So self-employment. So this one, as you'll all be glad to know, is a lot simpler than furlough schemes, which is lovely. Why not? Why not make them all simple? But basically, self-employed, still the same principle. You have to have been adversely affected by coronavirus outbreak. And just be warned with all of these at the moment, the Chancellor has recently signed a document to basically give HMRC some powers that if people have been taking the money and haven't been adversely affected, then basically HMRC are going to go looking. So yeah, just be aware of that. But if you've been adversely affected, Previously, you could claim 80% of your profits. Now it's 70%, and that's capped at 6,500, just over. So what will happen? That second grant is available in August. So the first grant is going to close 13th of July, so just short of a month, so about 4 weeks to go. But if you've not done your first grant for the self-employment, then make the claim before the 13th of July, and then you'll be contacted by HMRC again for that second grant to be done in August. But yeah, just bear in mind it's a lower percent, it's 70% this time. So that is so much easier. Self-employment, love that one.
It is, definitely is. Just to give some clarity on a couple of those points, when they made the announcement about claiming back the grants from people that haven't been adversely affected, strangely enough, they talked about it being 100% tax. They didn't talk about it being 100% penalty. And within the profession, we don't know why, whether that was just a mishap or whether that was a deliberate phrase at 100% tax. And we can't, I think, potentially, because a tax can be charged and then you defend it, whereas a penalty is defended and then charged. I think that might be the nicety of that one, but we will see. And then you have this magic phrase, adversely affected. Well, I know people, and I know a barrister in particular that's talking about being adversely affected by having too much work to do, and therefore overtime and having to recruit people and all that sort of stuff. So you can be adversely affected in a good way as well as a bad way, and then you get into mental challenges as well as financial challenges and all the other stuff that goes around it. So there will be some interesting court claims that come around that. My true opinion, my personal opinion, is that the amount of money that's involved won't be big enough in the big scheme of things when you get into C-bills and bounce back loans and all that sort of money, that it won't be a big enough sum of money for them to worry about, but it's there in order to scare people in not to take advantage of it. But we will see as time progresses. So the questions, Nicola, if anybody else has got any questions, we always give priority to people on the call. We've got a question from Paul first, who I can see is on the call. Nicola, I am worried about rents. What has the government made available to each level of business to help affordability/payment?
So rent is one that there's a few different things you can do with it, and granted mortgage holidays were obviously given, but rent wasn't. So the first thing I'd always recommend with rent is have a chat with your landlord and just discuss the situation with them, because some landlords, obviously you might be able to come to an agreement to allow you to basically separate the payments a little bit into the future, just to give you a bit of breathing space. But there's also, you're still eligible for, well, dependent on what you've got going on in your business, and obviously I'm more than happy to talk through that with you on a one-on-one. But you could go for the loans. So if you need cash flow, you could look at the bounce back loans. You could look at obviously the grants, depending on whether it might be to do with your rates, etc. So if you're renting, it depends who's got the rates, but we'll come on to that in a minute. I think there's another query that will hopefully help with that one. So the grants, the loans, speaking to HMRC about your taxes, the fundamental is, I'm not sure if you've been on our previous webinars where we've talked about cash flows, but if you look at your cash flow and you can see where the gaps are of when your rent's going to become a problem, then it gives you a bit of flexibility to work out, could you just negotiate a bit with your landlord, as opposed to needing to get a loan that eventually becomes payable with interest. So yeah, happy to talk to you one-on-one on that if you want any specific help.
And just to confirm on that, Paul, if you put in the chat box, if you change it to panelists only, if you put your email address or a telephone number in there, I'll gladly send you the recordings of those webinars. And as Nicola said, we'll gladly have a conversation with you about that. Ian has asked, and I know Laura has asked a similar question. Has there been any further information regarding the discretionary grant? It was announced and then nothing more has been said.
Oh, it's discretionary grant, honestly. So yeah, agreed. It was announced months ago now, and it just seems to be dragging on. So for those of you who don't know, the discretionary grant is something that gave a bit of hope to a lot of businesses that they weren't eligible for the others. So for the previous grants, you had to either be in the retail, hospitality or leisure sector, or have premises that hit the rateable values as they needed them to. So obviously small business rates relief, etc., etc. A lot of people didn't fall into those categories. So it might not, their rateable value might have varied, or they might have, a bit like we were just talking about with Paul, with renting, it might be that a landlord paid the rates and they just rented a building, a room in a big building. So a lot of people still had property costs and fixed property costs to pay, but weren't able to get any grants. So what the government said was to catch that gap and the people they'd missed, they were going to do a discretionary grant, discretionary being the fun word here, because it was for the local authorities to decide. So what's happened is it's been given, basically, the pots of money are with the local authorities, and each local authority is building the applications in order to allow you to claim. So you, differently to obviously the others, because this one's discretionary, you need to put an application in. So what do we know so far? The Spalding one is now live and they've got a pot of money and they're accepting applications. So if you're in the Spalding catchment area, they're now live. Peterborough, it's on their website. I had a chat with them last week. They talked about it on the Monday evening, I believe it was, in a meeting, but it didn't manage to get put through. So it got held off. It needed another decision making or something. So they're hoping it's coming very, very soon. But the update is still to continue to check that website, which we're doing on a regular basis. And what we'll do when we see that, we're putting it straight in sort of the Facebook group. We've got Peterborough Business Community. So we'll put the link in there as soon as we see it go live. But it doesn't hurt if you're not in the Peterborough area as well to keep checking up on your council's website to see when you can do the application.
And thank you, Nicola. And if you want to join that Facebook group, the URL to find it easily is www.greenstones.co.uk/community. So that's greenstones.co.uk/community. And that will take you to the Peterborough Business Community Facebook group. And that's where we fire lots of stuff in there. And there's a WhatsApp group as well that lots of people are a part of, that we also contribute that to. As soon as we've got it, it's just easier and quicker to do it like that than fire it out on an email blast, which also happens, but sometimes that's sort of 24 hours later. Next question, Nicola. Is there anything being considered by the government for directors only that were mainly paid by dividends? And that's from Paula.
Well, again, the directors is another area that's obviously been missed. Funnily enough, Simon and I were having a bit of a chat this morning about a lovely report that was published. Simon, do you want to go into a bit about what was the report?
Yeah, I can share. There's been a consultation process go on, and I hadn't seen it literally as we started having this conversation at 9 o'clock this morning, doing the audio test and all the rest of it. But that report has now been finished and submitted to government in whatever stage it is, committee stage or whatever language they're using, and the whole thing looks at the different areas of people that have been left out of this process, the directors being one of them, that obviously are paid mainly dividends rather than PAYE. There's also a group of self-employed people that have missed out, and obviously there are a group of employees that have missed out that were taken onto the payroll after the 19th of March. So they've now got 2 months to respond to that report. So it'll be after the summer if they stick to the guidelines. So unfortunately, there is no speedy answer to that. And again, this is purely a Simon personal opinion. I do not think the directors' dividends will change, because it's open to all sorts of elements of abuse, because they don't have the information like they do in other so for self-employed people and employees. So personally, I don't think it will change, but we will see. But that's where we are at the moment with that. Next question, Nicola, from Trevor. How do we deal with redundancies of currently furloughed staff?
Okay, so the redundancies, there's a few things to note here. So obviously, dependent on the number of staff that you need to make redundant, there is a process you need to go through. So you'll need a HR advisor to enable you to go through that process with all the bright boxes ticked. So if you need any contacts, let us know and we can recommend a few people. In terms of from the tax point of view and the furlough point of view, so they can still, if someone's being made redundant, you can still claim furlough for them during their notice period, but then any of the statutory redundancy payments that need to be made from yourself. You can't claim government money for that, so they need to be company made.
Yeah, just to add on that, basically any non-contractual payments, you can't obviously claim the 80% or whatever percentage it is at the time. And you need to be really careful around payment in lieu of notice. So if you pay somebody in lieu of notice, i.e. them not working their notice period, then you won't be able to claim the 80% for what we call pile-on. But if you've got a specific situation, Trevor, then we'll gladly talk to you about that. And obviously we've got an HR person that we can talk to in conjunction with in order to make sure that that process happens correctly. So I do know of people that are talking about compromise agreements. Well, as soon as you get into a compromise agreement situation, then that becomes payment in lieu of notice or a non-contractual payment, and therefore it's not covered. I've got in a chat, Paul, so I'll read that while you answer the next one, Nicola, if I may. So Richard's asked, is continued furlough an option employees can insist on if we have enough hours of work?
Okay, so this one I've heard of a few times now. So obviously to furlough someone, you needed employer and employee agreement, which is where the bits of paper all came in to make sure everyone was legitimate. But to come off of it, it isn't quite the same. So there's a few different things to think about. The first one is, has the employer made the company and the working practices safe? There's obviously a little flow chart here, if you can imagine it, a yes and a no. If your workplace is safe and you've obviously got the work and you want to bring them back and they don't want to, there then basically becomes an area that, are they refusing to do the work that's available to them, which comes down obviously the possible gross misconduct route. But then if the workplace isn't safe, if the employee feels the workplace is not safe, then at that point, obviously it's a bit precarious at the moment. So with that point, what you'd then end up doing is giving them unpaid leave. So obviously they wouldn't be paid if they didn't come in because they felt it wasn't safe. However, there's already a lot of speculation that there could be future court cases, tribunals all over this. I've already seen tons of articles about, has your employer done this or that? So whether it will be the new PPI or whatever it's called, then just be careful, because in any of these cases, I would seek advice from a solicitor and HR just to ensure you're doing everything as properly as can be, so that if you were to go down the gross misconduct route, for example, that you've shown all steps to make sure that that was the right thing to do and you can't have a claim against you.
Yeah, as Nicholas says, Richard, it's going to be a really interesting area, that is. So basically, you need to provide a safe working environment in order for them to come back into. And if they then choose not to, you then get into all the employment law that goes around that. I've got a customer that summed it up for me really well last week, in that he's put in place certain measures, but effectively he's using or treating his team as grown-ups. So we can get into all the speculation in the media and one-way systems and masks and gels and all the other stuff that the media believe that we need and all that. Whereas James has just said, well, I'm going to treat them like grown-ups, and I expect them to work and trust me in the way that they work, and that's how I'm going to go forward. So there's all the niceties of it, but there is obviously the practicalities of it as well. And Paul's comment was around treating others with the rent in the hospitality industry. And yes, Paul, so without going into all this, so I agree with you as well, Paul. Helen Preston has asked, can I bring back my receptionist part-time? And if so, how?
Yes, so as we just dealt with previously in the webinar, but just to recap for you. So yes, you can bring your receptionist back part-time. Obviously, as that question just showed, make sure it's safe to do so, and you've got it in a way that is safe for her or him, and make sure that obviously when you're bringing them back part-time, if you're re-furloughing them, a little bit like Simon said, we're waiting to see if that legal bit, because imagine if you wanted someone furloughed Monday, unfurloughed Tuesday, furloughed Wednesday, you spend more time signing agreements. So what we'll do, if we get an update, again, we'll share it in the Facebook group so that you know, but make sure there's a bit of paper in place each time you furlough her, and obviously ensure that your workings for the furlough claim are done on the calendar days and you're paying the 100% for the days she works. So again, if you want any assistance with that, because it sounds like it's going to be great fun, then just let us know, and of course we'll be willing to help.
Excellent, thank you. And we're not even talking about minimum wage, Nicola. That'll be another interesting case on that as well. But anyway, we'll get there. So we're coming up. I've got one last question, and so if anybody else has got one, maybe whack it into the Q&A. That would be great. Margaret has asked, what support might be available to small charities that are so far not eligible for the small business grant?
Okay, so charities should be able to get all the loans, etc., if necessary. And obviously, bear in mind, the bounce back loan is the first 12 months, interest-free and no repayments and no guarantees from yourself, all backed by the government. So the bounce back loan might be a cash flow option, even if, for example, you might not have spent all of it, so you might be able to give some of it back before the interest and the repayments start up again. But the bounce back loan is quite a nice one that helps people to obviously get through this short-term cash flow problem and make sure you carry on thinking for the future when you do that too. In terms of the grants, there was a few cases that went through where some of the grants were pushed back on. So it depends if you have property, Margaret, but there were some cases where the charity exemptions have now been brought in, and with some appeals that went through and other people have had their grants. So if you want to get in touch with me, and I'll pop my email in the chat box in a minute. If you want to get in touch with me, I'm more than happy to obviously help you go through that, because in terms of the grants, it might depend on which council and local authority you're with, but I've seen appeals that have gone through for charities, so let me know.
Yeah, I know one charity that applied 3 times and got it on the 3rd time, having been rejected on a similar application for the first 2 times. So if at first you don't succeed, try again. So that has answered all of the questions that we've got. Nicola's put her details in the chat box. That's just, you need to change that so it goes to everybody, Nicola, not just the panelists in the chat box, please. So everybody can get it. But it's live, you see, it's live. It's nothing greater than being live. So no more questions. Helen has put, reaffirmed that I need my accountant to do it, or an accountant to do it, rather than try and navigate it myself. I think that's a good summary of it, Helen. We are more than happy to support Peterborough businesses, and I'm going to say something there that is not very salesy, but we understand that some businesses in Peterborough aren't getting the support from the accountants that they may wish to get at the moment. However, we're not in the business of taking people on when they're in crisis or panic mode, for want of a better phrase. So if anybody on the call or in the meeting wants a conversation with us, we'll gladly share as much as we can and help you, inspire, challenge and support you in order for you to get the information that you want. There are certain professional things that we can't do without treading on other accountants' toes, but we will gladly support you. And then when the time is right for you, whether it be in 6 weeks' time, 6 months' time, or whatever, if you want to have a more rational conversation with us when things have calmed down a little bit, then we will gladly, obviously, have that conversation. If you want to move now, then we'll gladly have that conversation as well. But don't feel as though you can't ask for support or ask for some advice or a second opinion without feeling as though you're obligated to have a conversation with us about moving across, because we will do that as best we can. Obviously, we're not going to do lots of work for free, but we will gladly support you and point you in the right direction. Any other closing remarks for you, Nicola, just while I check the boxes to make sure that we've got no more questions?
Yeah, so there's just a few things. So the first one is just to remember the furlough scheme money that's coming in. Although it's nice the government's coming in, it will become taxable in your P&L. So just bear in mind that when you come to do your next accounts, that will look as another set of income. So obviously just bear that in mind when you're budgeting for tax, because, and we've spoken in previous webinars, although this part now isn't fun, the worry is when the beginning of next year comes and these taxes and loans, etc., become due, you want to be planning long term as well as short term. So just be careful with that. And then the other thing just to note is, like Simon said, these furlough claims are not nice at all. So if there's any way that we can help with your specific circumstance, feel free to drop us an email or pick up the phone and we'll just talk you through whatever your queries are specifically. Because as you can see, there's a whole world of possibilities and legal changes and government, and we're still at guidance, and So it's all great fun that we're all obviously enjoying so much at this point in time with all these furlough changes. But at least we didn't have to learn the Welsh bit, so that was one thing. But yeah, so feel free to give us a call and we'll help you in any way we can.
And just to top on that, Nicola, there's a really important point. We've shared this in lots of places, but I feel as though it's important enough to keep banging on about it, for want of a better phrase. If you have borrowed money, either on a bounce back loan or a C-bills, or in fact any money from anywhere at all through a limited company, you need to be really careful if you're using that money to pay your personal expenses. So a company needs to have profits in order to pay a dividend, and that dividend then is used to pay your personal expenses. So just because you've got a 50 grand C-bills loan or a 50 grand bounce back loan and that money's come into the company, you can't just take that out and spend it on mortgages and holidays and speedboats or whatever else it is that people are coming up with ideas without there being tax consequences in the future. So there are ways, I want to say ways around that. There are ways of restructuring how you pay yourself in order to make it less likely that that will be recovered. However, they also have tax implications as well. And then we get into insolvency questions and all sorts of different things. So if you've got a bounce back loan or a C-bills loan that you think you may be using to fund your personal expenditure, then it's definitely worth having a conversation with us or with your accountant and finding out how that will be treated in your accounts, so you don't get a big surprise in the future. And another slight throwaway one for those of you on the call that aren't GreenStones customers, you should also be thinking about extending your financial year end. So if your year end is normally the 31st of March, you may be able to extend that to, say, the 30th of September. So you include the loss-making period or the reduced profit period from the 1st of April through to the 30th of September. And as that's aggregated out over the whole of the 18 months, it reduces your tax liability. It doesn't reduce it completely, but it reduces the tax liability and when you pay the tax. So definitely be having a conversation with your accountant about changing your year end if it doesn't include this low profit period or potential loss making period. Just a quick check, and there we go. So there's no more on the chat, no more on the chat box. As I say, anybody got any questions, ask Nicola. Nicola's the expert, don't ask me. And and we will gladly look after you. We've got another one coming up. I think there's a coffee and chat coming up next week, which you'll get an invitation to. But for now, say thank you very much for Nicola. I'll do the usual virtual round of applause and say goodbye for now. Say bye-bye. Bye-bye.
Bye.